So here's an example of a losing trade based on our strategy, what we teach our clients. This is USDCAD, and we took this pin bar reversal off a key horizontal level. It was actually off parity, where $1 US equals $1 Canadian dollar. So it was a very, very strong level. And we can see that this level spanned back for quite some time, for over a year. So we had every reason to believe that if we simply entered with our entry above the high and our stop loss below the low, that would be sufficient. So we wanted to place an order to go long just above the high of this pin bar reversal, with our stop loss just below the low, and we were looking to target here, halfway up the range. We were looking for price action to simply break the high of this low test, or pin bar reversal as you might call it, and trickle up towards that point like so. However, let's see what happened. This was a 6-to-1 reward to risk trade, by the way, when we risked 2%. So on the first day, we were triggered into the trade. We're in the money just about, and low tested again for a second time. We're in the money, we're up about just shy of 1.5%, and then we lose 2%. So this is a losing trade. It didn't work out, unfortunately. However, as we risk no more than 2% per trade, and we go for a reward to risk of a minimum of 6-to-1, we know that we can have more losers than winners. And high reward to risk carries us the whole way, so that we can have, ironically, more losers than winners and still be up overall. So whilst we have a losing trade, it's part of the business and we have to be in it to win it. And as you'll see, with our pound New Zealand trade, we can do very well indeed. If you haven't seen our pound New Zealand trade, just look at the video to your left and you'll see how we can make a very decent reward in a very short space of time, and we can afford to have losing trades.